Palantir Technologies continues to stand at the center of one of the most intense debates in the artificial intelligence investment landscape. On one side, you have investors who believe this company represents a once-in-a-generation opportunity to capitalize on the rapid evolution of data-driven decision-making. On the other side, there are skeptics who argue that the current valuation already assumes years of near-perfect execution. As of today, Palantir Technologies is trading at $154.78, a level that reflects both its massive run-up and the recent cooling-off period after hitting a 52-week high of $207.52. When looking at forward expectations, the valuation estimate from 24/7 Wall Street places the stock at $171.26 over the next 12 months. This implies a potential return of 10.65%, backed by a confidence level of 90%. While that may not appear explosive compared to the stock's prior gains, it still suggests that analysts see continued upward momentum even at elevated levels. That being said, the journey through 2026 has not been smooth. The stock has declined 12.92% so far this year, falling from its year-end 2025 price of $177.75. This pullback reflects a combination of profit-taking, broader market volatility, and increasing scrutiny on high multiple artificial intelligence names. However, what stands out is the stock's resilience. From its February low, shares have already rebounded by 14.45%, signaling that buyers continue to step in aggressively during periods of weakness. Expanding the time horizon provides even more context. Over the past 12 months, Palantir Technologies has delivered a remarkable gain of 59.98%. Even after the recent decline, the stock remains only 10% below its peak, which highlights just how strong the underlying trend has been. This type of performance reinforces the idea that institutional investors still view the company as a core artificial intelligence holding rather than a short-term trade. Now shifting to fundamentals, the company's Q4 results further solidified its position as a leader in the artificial intelligence space. Revenue reached $1,410 million, representing a 70% increase year over year. Not only did this mark a significant acceleration, but it also exceeded expectations by 5.74%. Earnings performance was equally impressive, with adjusted earnings per share coming in at 25 cents compared to the expected 18 cents. Looking at the full year 2025, the numbers become even more compelling. Total revenue reached $4,475 million, growing 56.18% year over year. At the same time, free cash flow surged to $2,270 million, nearly doubling from the prior year. This level of cash generation is critical because it demonstrates that the company is not just growing rapidly, but also doing so in a highly efficient manner. One of the most powerful drivers behind this growth is the commercial adoption of artificial intelligence, particularly within the United States. This segment has become the centerpiece of the bullish narrative. Growth in United States commercial revenue accelerated dramatically. By the end of the quarter, this segment alone generated $507 million in revenue. This momentum is expected to continue into 2026. Management has indicated that United States commercial revenue is likely to exceed $3,144 million, representing at least 115% growth. Even more impressive is the net dollar retention rate of 139%, which shows that existing customers are significantly increasing their spending over time. This type of expansion is often viewed as one of the strongest indicators of product market fit and long-term sustainability. Beyond financial performance, Palantir Technologies is executing on multiple strategic fronts. Historically, the company was heavily reliant on government contracts, particularly within defense and intelligence. While that remains an important part of the business, the company has successfully diversified into the commercial sector. This transition is crucial because it opens up a much larger addressable market and reduces dependency on federal budgets. At the same time, Palantir Technologies continues to strengthen its position within government partnerships. The company has secured a contract with Fiat Chrysler Automobiles and is seeing its artificial intelligence platforms adopted by the Pentagon as a core component of military operations. These developments reinforce the company's reputation as a trusted provider of mission-critical software. In addition, Palantir Technologies has established partnerships with several major organizations, including NVIDIA, Centrus Energy, Rio Tinto, and Polymarket. Each of these collaborations expands the company's reach into different industries, ranging from energy to mining to advanced computing. This diversified approach not only drives revenue growth, but also strengthens the overall ecosystem surrounding its artificial intelligence platforms. Despite all of these positives, valuation remains one of the biggest challenges for investors. The stock is currently trading at a price-to-earnings ratio of 255 times, which is exceptionally high by traditional standards. This level of valuation implies that the market expects sustained hyper-growth and continued margin expansion for many years into the future. Because of this, even small disappointments could have a significant impact on the stock price. For example, any slowdown in United States commercial growth could lead to a reassessment of the company's long-term potential. Similarly, changes in federal spending priorities, particularly if there's a shift away from defense-related artificial intelligence, could create additional pressure. A broader slowdown in artificial intelligence investment across the economy would also pose a risk. In a more conservative scenario, the stock could decline to $137.73 by March 2027. This would represent a decrease of 11.01% from current levels. While this is not a catastrophic drop, it highlights the importance of managing expectations when investing in high-growth companies. On the other hand, the company's profitability metrics provide a strong counterbalance to these risks. Generally accepted accounting principles net income reached $1,625 million for the full year 2025, marking a year-over-year increase of 251.59%. This level of profitability is particularly notable because many high-growth technology companies struggle to achieve consistent earnings. The balance sheet further strengthens the investment case. With total liabilities of $1,410 million and total assets of $8,900 million, Palantir Technologies maintains a solid financial position. This gives the company the flexibility to invest in new opportunities, expand its platform, and weather potential economic downturns. Returning to the valuation estimate of $171.26, it becomes clear that the market is pricing in a high level of confidence in the company's future performance. The combination of strong earnings growth, clear visibility into future deals, and expanding margins supports this outlook, even with a beta of 1.74, which indicates higher volatility compared to the broader market. Analysts still maintain a 90% confidence level in their estimate. Looking ahead, one of the most important factors to monitor will be the company's revenue outlook for 2026. Current guidance suggests revenue between $7,180 million and $7,200 million. In addition, the company is targeting a Rule of 40 score of 118%, which reflects a balance between growth and profitability. Achieving or exceeding these targets will be critical in justifying the current valuation. Analyst sentiment continues to lean bullish. UBS and Rosenblatt have both assigned a price target of $200 along with a buy rating. This optimism has been further supported by reports that Palantir Technologies is working on software for the Golden Dome Missile Shield initiative. Such developments highlight the company's ability to secure high-profile projects that can drive long-term growth. Taking a longer-term perspective, the outlook for 2030 presents a range of possibilities. In the base scenario, the stock is expected to reach $226.11, representing a total return of 46.08% from current levels. This scenario assumes steady execution and continued expansion in both commercial and government segments. In a more optimistic scenario, the stock could climb to $294.18, delivering a return of 89.95%. This would likely require accelerated adoption of the company's artificial intelligence platforms, as well as favorable market conditions and continued innovation. On the downside, the bear case places the stock at $138.22, which represents a decline of 10.71%. This scenario could unfold if growth slows, margins come under pressure, or the broader market begins to reevaluate high multiple artificial intelligence stocks. Ultimately, Palantir Technologies represents a high conviction but high risk opportunity. The company is clearly executing at a high level with strong financial performance, expanding partnerships, and increasing adoption of its artificial intelligence platforms. However, the elevated valuation means that expectations are extremely high, leaving little room for error. As a result, investors need to carefully weigh the potential rewards against the risks. Those who believe in the long-term growth of artificial intelligence and Palantir Technologies' role within that ecosystem may view the current levels as an attractive entry point. At the same time, more cautious investors may prefer to wait for a more favorable valuation or additional confirmation of sustained growth. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.